Hello, everyone. It is March of 2020 as I make this video, and we've just gone through a fairly significant market correction as a result of fears around the COVID-19 coronavirus. So, what I wanted to talk about is that this is a fairly regular occurrence in the marketplace and results in what we call dips and recoveries. So on this sheet here, I have a listing of the last 12 or so major market corrections since 1950. And the interesting thing about all of the information here is that uh, the time that the loss in value occurred to the time that not only did it come back again, but then within the next 6 months exceeded where they were before is much more brief than most people think. The one I'll draw that I think has the greatest connection is the terrorist attacks in September of 2001. The market lost 12% of its value in just 1 week. And within 2 months, it was back to where it had been prior to 9/11, and then had been up 19% over that within 6 months. So what that demonstrates is that there's a real loss of opportunity for people that panicked and got out. So if this is a fairly representative depiction of the market with its regular ups and downs on here, it's this period in here that is the biggest concern for the dip. So what is unknown is how long is this period? Is it 1 month? Is it 3 months? Is it 18 months, which is the average for corrections to come back? But as long as you do not need the money during the period of the dip, there is no point in panicking and taking the money out because you don't know when it's going to come back and you don't know how big it's going to grow afterwards. So if you can hang on through this dip, uh, there's really no impact to your overall investments. So what actually happens is people who are aware of this, they capitalize on these dips because there's not a lot, you don't make money on a steady increase. But when it goes down, if there's an opportunity to buy in and get more of whatever it was that you had, when that comes back up again, you really do take advantage of it. The second part is that sometimes in here we have seen really big peak days that occur, and if you're out, you lose out on that. So this is now Thursday. On Monday was the largest single gain that the North American stock markets have ever seen, which followed on the heels of 1 week of massive sell-offs. So you couldn't have predicted that Monday would be a day like that, but if you're out of the market, you lost out on that. So please be aware of the timing that you have. If you don't need the money now, if you don't need it next year or 2 years from now or 10 years from now, these things are perfectly fine. They're normal and may actually be beneficial in your returns overall. If you are on the verge of taking money out to buy a house within the next 6 months, or you're looking to start to retire, maybe we should talk about whether there's an opportunity there. So I hope this has been helpful. If anyone would like to get a copy of this form here so they can see and compare to some of the market downturns and corrections, please send me a direct message or message me in the video here, and I will email you a copy of that. So thanks very much, everyone, for tuning in again, and hopefully we can get you some new information in the future.